Good morning, everyone. Lutz Porcelino from Manover Mark. Today's the 12th. We're dealing with power outages, high winds here in Illinois and Chicago, well, throughout the Midwest yesterday night. We're dealing with power. We were ready to start the broadcast, and intermittently the power went out here at the office. So we need to, it's going to be a scaled down part of the show, but we're going to cover S&Ps and oil this morning because I think oil's at its do or die. I've put the charts out. S&Ps are looking to make new lows here. We're actually trading on the lows. So let's get to the chart sharing, and we'll talk about it because we don't have a lot of time here before the opening. Okay? So let's go with right here. I'm going to go share the screen. We'll go to right here and start sharing. Okay. All right. So overnight profile. Take an overnight profile look right here. High, 77.5. Okay. Low. We just took out this old bottom. All right. Single prints, we're down here from 2057.75 down to 55.25. Okay. All right. The next thing we got is another old bottom right here at 2053. Okay. So we're looking right here. So we have these bottoms right here, 2053 down to 2051.25. Underneath 2051.25, we're looking down to 2048.25. All right. Ultimately, I've always said I thought the market rose up in some pretty poor structure. All right. And that these are areas I thought we could retrace based on the structure that was left below. Okay. All right. So currently we're right here. Here's our day chart. All right. Value area low at 70.5. I got a bull bear zone at 72.25. I've got VPOC at 2074.25. I got the high at 2077.5. 2077.5. All right. So we don't get confused. Let me bring these charts in. I've been telling you this for a while, right? So here are the day charts. Okay. And this is where we've come from. And now we're looking to, we up here, we made these highs up here, right? 21.11, we kind of failed. And I think the market could ultimately trace back to 2015. All right. It's got to spend some more time in here before it makes up its mind. These movements, when they go straight up like this, is not a good enough structure down here. All right. So, but they don't give you an opportunity to say, oh well, they got to go back down there. Like yesterday, the market made new lows and then it rallied up and made new highs. So here's the cash market, SPX. All right, and so this is cash. Ultimately, it's bullish unless we get under 2032 again. So not to be alarmed about this kind of movement. This movement is normal, but you gotta pay attention, right? So I wasn't able. I had everything ready to go out, but I want people to see that this is the do or die now for oil. Okay, OPEC has put out still at its maximum production. All right, so look at this: 1, 2, 3, 4, 5, 6, 7 days. If we get a close underneath this 40, and I've been saying this for a while now, right? This 41 right here is our day pivot right there. You can see this is the dot goes up here, resets itself. This is our proprietary pivots, but this is telling us that oil it really is in the bear now, under 41.95. But the key is that we have to close under that number. We have to get a day close under the number. All right. If we get a day close under the number, I think you're going to see, what all the big boys have been talking about, and that is oil down in the mid 20s. Okay. So, with Matt, and look, at the end of the day, you have everyone producing oil because it's what they do, right? So what are you going to do? Just because the price is where it's at, you're not going to produce it, right? Like I listened to a speaker tell me, it's like being a magician with one trick. You can only do one trick, right? So you got to keep doing the same trick over and over. All right. So you got to be careful. So this is oil. I had up all this. I actually put them out on Twitter. I got the oil chart out. So just I'll redo these and I'll get them back out to you. As soon as we were out there, the power shortage started. So and kind of destroyed what we were doing. So let's just go back to S&Ps. All right. You're gonna have to, we're gonna have to deal with, the market moving down. All right. And when we fill these areas, okay, and we do this in the overnight sessions, to me, these don't, the filling of these single prints, the filling of this bottom, all right, I think it's got to be reaffirmed by trading back up through these areas in the day session. All right. In the day session, to me, the day session matters the most. So, if there's any questions out there, Anthony. Okay. I think also we got gold prices moving down, but once if the market starts retracing, okay, and I think the important thing. Let me stop sharing the screen here. All right. If the market starts retracing, and the important thing is that I think the Fed was sort of embarrassed with the fact that they were being considered, their hands were tied, they could do nothing. So they came out with those, with a strong statement saying that, look, December's on the table. And now you got oil looking like it's going to go down. All the commodity prices are down. Gold traded down because definitely if we get a rate hike, gold will get down to under 1,000 because it now there's a place where you can put money in or an interest. And the euro's are getting killed, and this is not very good. The stronger dollar is not very good for the rest of the world. But so we could have a real volatile December if the Fed decides to change its opinion. As far as the S&Ps are concerned, and the ES, I think that, I've always been torn between two things. One, is the technical charts driven by the fact that the technicals and everybody are looking at them, or is it driven by news and some sort of events that make it, sort of make the charts come true, right? Self-fulfilling prophecies. But at the end of the day, do we care? All we care about is that we're reading the charts right and we're being nimble enough to trade both sides of the market. And that's what you have to worry about. All right. So we are going to, stay with you and tweet some things out today. And like we always do, but we may be interrupted by some power shortages. So if we are, sorry about that. Don't have anything to do with ComEd except as a consumer. All right, everybody. Good luck trading today. Remember, keep it green. Talk to you later.